GKFX Prime presents the Market Analysis Webinar.
Hello everybody and Happy New Year. Welcome to another weekly webinar. So it's been an interesting start to the year. We had some soft non-farm payrolls data last week, but that doesn't seem to have damaged the overall idea that inflation is high. The Federal Reserve is going to have to raise rates at a quicker pace this year than they've already signaled. And so that talk of higher interest rates in the US is fueling overall dollar strength, helped by rising bond yields. So this is kind of the big theme as we kick off the new year. Naturally, rising yields, that's not good for gold. Gold and silver looking very soft at the moment, potentially big declines coming for those precious metals, but let's see. I'll talk about that in just a moment. And Bitcoin also having a bit of a rough start to the year, testing the big 40,000 level. I'll talk about that as well. And Indices just put in a bit of a bearish engulfing week. So that potentially means some weakness in stock markets coming up. Let's talk about all that. If you have any other questions about other charts that I'm not talking about here today, please just drop a comment, or about anything I've just said. Again, drop a comment. We really like that. Otherwise, please just have a look down there, click that thumbs up button, give us a little appreciation. We really like that too. Right, let's have a look at the euro dollar chart. So this is the daily candlestick chart. Kept it pretty clean. It's a downtrend, but more recently, as we've noted over the last few webinars, we've been in a short-term range market. Now it looks a bit like a bear pennant. But pennants will often change into some sort of different shape. But for the moment, we've got a pretty clear resistance and we've got an up-sloping trend line. But again, it could just drop through that trend line and just turn into a rectangle, or maybe a more clear bottoming pattern. At the moment, this looks like a continuation pattern. It looks like, the trend is down. So it's just going sideways before the next drop. But we should note that, that we are at quite a significant weekly level. We talked about this a few times as well. This 112 on euro dollar, it was basically the resistance as the market was trying to find a base throughout 2009, the late half 2009. Then we had the disruption of 2020, but then eventually did break higher, pull back to that same resistance as support. Now we're testing it as support again. So, and then a somewhat positive hammer pattern on the last weekly candle, maybe suggesting the potential for an upside break. We're basically looking for a move through this, as I say, pretty clear resistance line around 113.80 to give us our upside signal, or we're looking for a drop down through this rising trend line through the bottom of this potential pennant pattern to show us that the downtrend is continuing. So this is where we stand. We can look on the 4-hour chart. It doesn't tell us too much. It's just a bunch of chop. You can see that the moving average is just flat and the RSI is not reaching any of the extremes because it's in the sideways range. Now, lots of opportunity to buy and sell within this range. Just a warning at this stage that it's been going for a while. It's 6 weeks old, at least this range now. So I think it's preparing for a break. Could it happen this week? Certainly could. Two of the major events to look out for this week are US inflation data. We've also got Chinese inflation data, as well as Federal Reserve Chairman Jerome Powell and Deputy Chair Lael Brainard are testifying to Congress about taking those respective positions. They were nominated by President Joe Biden. That just could be a big mover if they take the opportunity to say to the government officials that, to highlight that they are going to combat this high inflation, and maybe that would be the time that we can see some more interesting moves in the dollar, depending on what they say. Potential reason for it happening this week, but as I said, at the moment, we're stuck in the middle of a trading range. Not much to say, but we can understand this big picture offering some potentially lucrative trades once we get out of this range. Now onto the British pound. This is the daily candlestick chart. Quite a clear-cut downward sloping channel, I think, here. And we've just bumped into a combination of the downsloping channel trendline resistance, as well as a former area of support. Bit choppy on this occasion, but you can see it kind of was what we saw the big breakdown through and retest here. And we have stalled a little bit at this area. Now, I should note we were pinpointing this 136 as potential resistance, and it has been resistant for the last 3 weeks, but maybe we get the upside break, and we've still got the channel resistance above here. So short term, obviously the British pound is trending higher. A potential setup where you can combine time frames here is where we're looking at the daily time frame. We're thinking maybe there could be a sell-off from this combination of resistance and support and the downsloping trend line. We drop down to the 4-hour chart. We've got a pretty clear cut, had a false break here, but still 1, 2, 3. To me, this is a decent trend line, represents the trend pretty well. If the price drops and closes below this rising trend line, that would be a short-term confirmation of what we're seeing on the higher time frames. Also a little bit of bearish divergence here on the RSI, but still very much hugging the overbought area, so signaling that uptrend that you can clearly see in the price. So while we're above this rising trend line on the 4-hour chart, if we got to dip down to it, you could certainly assume that the trend will continue higher. Maybe assume that there's going to be a breakout of this longer term resistance. If the trend line breaks and we get a close below, as I say, I think this could be a potential short term confirmation that the short term trend has turned lower and that the longer term resistance is working. Moving on to Dolly Yen, we pointed out this breakout as it was happening. It's still going 3 weeks later, but we have stalled a little bit at 116. Don't want to try and draw too many lines in here, but this little spike low over here is 116, and you could sort of say, these spike lows, these spike low here, and potentially even this whole move here was a sort of false breakout of this kind of head and shoulders neckline. I suppose that's what I'm trying to say here. This, where we are right now, 116, is basically the head and shoulders neckline that broke and gave us that huge downtrend in 2016. And then we've been really just in a long sideways range. And obviously we're looking at a long-term weekly chart here. But this move above 115, I think it is significant. But naturally we're just stalling a little bit. But to me, the breakout has happened, and Dolly Yen still looks good while we're above 114.50 is really the big level. Drop down to the daily chart, and you can see that a modest pullback going on, and this is our 114 level. So if we've got a pullback to 114.50, that's our big level. That would obviously be a nice opportunity to rejoin that long-term breakout. At the moment, we're just testing the former highs. If I zoom in a bit to make it more clear what we're talking about. Clearly, this was the old high, and we've just pulled back to that. Now, this could be the end of it, but we did have quite a decent rally up, so maybe there's a bit more to go. And 115 as a round number is just below. So somewhere in this zone, above this 20-day moving average, potentially an opportunity to rejoin this long-term breakout. Right, moving away from Forex into precious metals. Bit of a busy chart here with gold. This is our long-term resistance, which I would basically characterize as a false breakout here. Hit that long-term declining trend line, roll back over into this long-term trading range that we've been in. And then more recently, we had this big bearish engulfing candlestick on the daily chart from that same resistance. And then we've had a couple of and then we tried to get back up there again. We had a shooting star pattern confirming the bearish engulfing. Now we've broken down through this little channel that was happening. And you can see that that's all going on at significant Fibonacci levels. So here's our big drop. We've rallied up. This was our big support level. So we actually had a false break. Price rallied up nicely through the 20-day moving average. We held above the 20-day moving average without much momentum for a while, but you can see 50%. We had a pullback from there. We had another pullback from the 50%, and then we've had a pullback from the 61.8, and now we've finally had another pullback through the 61.8. But you can see this one seems to have been a bit more material, taking us back below the 20-day moving average, which had been the support. Now it's the resistance. It looks like, the price is still in its trading range, but it's going through a more bearish phase, and it looks to me like it's headed for another test to the bottom of this trading range, around 117.60, and potentially a big move lower. And again, let's see how this big theme works out and how quickly it works out. We've had a big jump in yields, US yields. Jump in US yields is good for the dollar, and that would be bad for gold and silver, which I'll talk about just now. So that's the fundamental backdrop to why these technicals could be working out. Let's see what the Fed and the inflation data say this week, if they support potential big breakdowns in gold and silver. So here's silver, again, still in our big trading range, right? But look at this last weekly candlestick. That looks ugly to me. It looks ugly in that it looks bearish. It actually looks quite beautiful in terms of a trading setup. What's the backdrop that we've got here? Let's keep on this weekly chart for a while, just keep it clean. Traded down, didn't make it to the top of the trading range, came down to the bottom of the trading range, rallied up, had a false breakthrough, made new multi-year lows, not multi-year, but multi-month at least. Rallied up off there, broke out, it was a false breakout, tanked right back down to the previous low, had three fairly innocuous looking rising candlesticks, and then a big bearish one. So this to me looks like drop, consolidation, continuation pattern of 3 weeks, continue the drop. So if this big bearish engulfing pattern and the general setup of what we're looking at here, as well as the 50% retracement of this big drop, if that all pulls together, then we're looking at a break through this long-term support. And I think that's when the floodgates could really open up in silver, because people have been holding on, the longs have been holding on above 22. But if 22 gives way, I think there's going to be some capitulation, and this market could dive quite significantly. I actually like gold and silver as an inflation hedge longer term, but you've got to follow the charts. At the moment, the charts look pretty soft. Now, this 22, it could ultimately, hold a support and turn out to be a good buying opportunity. It just doesn't look like it at the moment. It looks like the buying is gradually being eaten away, and sellers are going to overcome it. This is just how it looks to me. Let's move over to the gold market. The oil market, still in commodities. This is our weekly chart. This is our big level that we have successfully broken through, but we've come back and tested as support. It's around 65 to 66 is that big level. We rallied off it nicely, but we did have that big drop down from 84. And if we come out to our daily chart, you can see that we've basically just run into a 76.4 retracement level of this big drop. And this was, particularly this, was a pretty big sizable drop. There's a lot of factors affecting the oil market, but overall the trend has been higher. But is it now running out of steam? Probably the biggest driver to suspect it might be running out of steam is just expectations from investors for whatever reason that there might be a bit of a slowdown in economic growth this year. In which case there'll be less demand for oil. Still, obviously, travel restrictions because of COVID. People have been pricing that travel restrictions to be lifted. They just keep getting added again. That's not good for travel, not good for oil demand. And so potentially looking at a pullback from the 76.4. If not, it's also the 80 level. So people are selling at 80 and the 76.4, combination of resistance there. This is an early opportunity to sell in. But this short-term trend is high. If we look at this 4-hourly chart, it's a decent uptrend. So again, what you can potentially do to kind of limit the risk of basically, selling into a rising market is that you can look for a short-term confirmation of a breakdown through a rising trend line first before you decide to act on this longer-term area of resistance. Now, daily charts, this is quite a kind of long-term perspective. It requires, stop losses of appropriate sizes for the daily chart. But if you come down to the 4-hourly chart, then it's more of a kind of slightly more day trading time frame. You can kind of trade with that long-term level in mind, but trade the kind of respective support and resistances on this on the 4-hourly chart. Okay, switching gears to indices. Obviously, an absolutely rapid uptrend, as we know, in the S&P 500. Just drawn in some of the kind of major levels that I think we're dealing with at the moment. We've struggled to break out through the big. We have made record highs, but 4,700 or basically 4,720, you could say, that's been resistance, and we just had a little bearish engulfing candlestick after the record high and then down under that resistance. So again, our market's about to get majorly spooked by the Federal Reserve and the prospect of big increases in interest rates to combat this inflation. If they are going to get spooked, that would be stock markets selling off, right? And you have to say we are well overdue a bigger drop in the market. What does bigger drop mean? 10%. That's officially a correction. We've not had many of those recently. And that would be, and if that were to happen, if you're talking about 4,700, and you're talking about a 10% drop from 4,700, obviously that's 470 is 10% of that. So you could say roughly a 500-point drop. So that would take us down to about 4,200, and actually you can see that's these lows down here, or it's actually these former highs and these lows through here. That's basically the 4,200. That's kind of roughly our 500 points that we could be working with here to deal with in terms of correction. Let's jump down to the 4-hour chart. You can see there's not a lot going on. See the daily chart, I think, slightly better, just to see that actually we did have a bit of a rough one for our first week of trading. We traded up there, hovered around at the record highs, and then slammed back under this resistance. So false breakout in the short term, and some big longer term risks in terms of what's holding up this market is obviously a large part of it is cheap money, and that cheap money is getting taken away first and foremost by the Fed, maybe. So without the cheap money, sort of big fundamental underpinning, markets have been trending higher for a while, due a bigger correction. So it's tempting to try and sell, or it's always tempting to try and pick the top. But if there are some short-term signs of weakness, that's what it's all about, right? Trying to take those opportunities. Last but not least, let's have a look at Bitcoin. Same old levels that I've had in for a while. I did have this zone in for probably last 3 or 4 webinars, I think, and we are probing and testing this 40 to 41,000 as support. The downtrend that we're in the moment looks rough, but this is quite a major level, and maybe we can get a more significant bounce from here. We're oversold on a daily chart. We're testing support. The trend is down, but do we get a reversal from here? Well, here's our 4-hour chart. There's no particularly decent trend lines working here exactly. But you could put on, for example, a moving average. Let's do that. 20 or maybe 50. There's our 50-day. If we had a pop up through the 50-day moving average, obviously 20 would be a bit more aggressive. We have had moves through the 20, and they've just been selling opportunities previously. But if we moved up through the 20, dropped down again, held 20, and started to rally up again, then you could think again maybe that long-term level is working. At the moment, probably the next test of 20, the last few times, you move above 20 and then you move back through it. That's your kind of sell signal, right? Up through 20, doesn't hold, sell it down. Up through 20, sell it down. So this has been the trade that's been kind of working for a while, but maybe we're about to get one of these periods, right, where we drop. This is exactly what I'm talking about. Rally up through the 20 period moving A, pull back, test it, rally up again, and eventually drop down, and all that. That's the whole cycle of trading the trend, right? So potentially this long-term level going to work. We have been going through quite a sustained period of softness. If 40,000 doesn't hold, then I think a lot of confidence is, it's already starting to come out of the crypto market. But if 40,000 doesn't hold and we get down to another test of 30,000, then that's a real test of the hodlers of Bitcoin, and so potentially interesting couple of months coming up here. Could be a bit of a rough ride in Bitcoin if some of these key levels give way. At the moment, we're just eyeing a short-term opportunity. Maybe we can get a rebound off 40 to 41. Also, just looking at those short-term bearish trades off the moving average, but keeping an eye on this big zone. If it gives way, it could be a bit of a rapid move back down to test 30k again, and who knows after that. All right. Thank you very much for tuning in, everyone. Really appreciate your presence here. Make sure to subscribe to the channel so you don't miss when these videos come out. And otherwise, have a great week trading. Thank you.